Good morning, all. CamelbackTrading.org coming to you this Thursday morning, June 25th, and we're looking at the market profile of the SPY ETF here on Window Trader. And after gapping lower again yesterday with an island reversal, having a trend day down only to form into pretty much a B shape for long liquidation as we go 9 wide, the bears are attempting to push lower this morning. Very important levels as far as I'm concerned. That 302.50 level on SPY is critical. We got below it one time yesterday in E period, spent no time there. Well, we're testing it right now. For the past hour, we've been trading right around it. It's critical because that would put us, if we get accepted back below 302.50, into that balance where the ultimate destination is the 287 level. So for the bulls this morning, 302.50 and the 200-day moving average, which is around 301.70, are very, very critical. We take out yesterday's low and get acceptance below there, and eventually we are going to start trading down to last week's low. All right, destinations for this morning. Right now, with just over an hour to go, the first destination would be 9 wide at 304.52, and then we have those single prints at 305.75 get filled at 306.15, and 306.83 get filled at 307, 2 sets, and then yesterday's high of 310.51 and filling the gap at 311.61, 110-point gap. Right now, my pre-market high is 305.33, so above the 9 wide, but below the single prints. Now, if we gap lower in the next hour, obviously yesterday's low of 302.10 would be the first destination. And that would be critical again if that gap was to hold, if we gap lower, because obviously we're below the 302.50 level and most likely the 200-day moving average. So a huge, huge level here for the bulls to defend. For the downside, we have yesterday's low of 302.10. Then we don't have anything to 296.74, right? My pre-market low, I should say, is 301.45 as of now. But then there's nothing until the weekly low, last week's low of 296.74, and filling the gap at 295.67. So we talk about how price has to seek its level, how these algorithms are set like heat-seeking missiles to visual points. Well, that point is $6 lower from yesterday's low. Keep that in mind. And then below that, we become pretty scarce down to another weekly low with the huge gap. We have 295.45, which was a price probe from May 22nd, 294.25 afternoon pullback low from the same date, 293.22 daily low, and then the next huge level, 291.95 weekly low, and then filling the gap at 286.33, 562-point gap from May 18th. So, again, this 302.50 level is crucial. So what is the game plan for this morning? Well, again, it's just over an hour to go. If in the next hour we are to gap lower, I would take a put play, and obviously my out would be if the gap was to fill. The gap does not fill, my pre-market low would be the first destination. And then again, below there, we have nothing until way down below until we get more market-generated information. So, key levels. That would be a put play early. If we are to open in balance, but below value. Now, there are certainly a couple of things you can do. You can take a call play against yesterday's low in the 302.50 level, right? At least you know you're out. If you take out yesterday's low, and certainly you get below the 200-day moving average, which is around 301.70, I'm out on that trade. That would be one call play you can take. I thought there would be good odds that we would trade inside of M period from yesterday. So far, that's not happening. However, if we do get accepted back into M period, you're certainly going to get tremendous chop inside of there and revisit the POC. So obviously the bulls have to take baby steps. They need to hold yesterday's low They need to hold the 200-day moving average and try to get back into M period and take baby steps to take the POC and work their way back up to where the trend day was. This is the lower end of the distribution. Right now we're trading at the lower end of the lower end. There's no coincidence we've been trading since I've been watching this all morning right around that 302.50 level. Now, let's take a look at the charts. We'll look at the weekly and the daily. Okay, so why is 302.50 critical? Well, I've gone over this a lot, but again, repetition is good. Becomes to a point where you don't have to look at it, especially when things get crazy. It's ingrained in your head, these key levels. So here, look at this top of this balance. Right here's the 287 level we talked about forever for the last over 2.5 years. Right? Had trouble getting over it. Had trouble getting over it. Finally got over it, but we spent a lot of time between 287 and 302.50 before we finally broke out and exploded to our all-time highs. Well, now look where we are. You think this is coincidence? These last 5 weeks? Do you really think this is a coincidence? The last 5 weeks we've battled in and out of 302.50? Of course not. There's no coincidences in trading. There's no coincidences in anything, but certainly not in trading. Key level being fought over. If the bulls defend it and hold on, you have a chance to start going back to the top of these 4 weeks. You get accepted below it, you're going to take out last week's low and eventually test the bottom of the balance, which is 287. And then on the daily, again, down. Gap is my main focus. We survived the 200 yesterday the first time. Again, I don't know how many times you want to test it. Now, they tested it 3 days, right, down but below it, and held it each time, though. If you notice, we closed above. Actually, the first day we didn't, but the next 2 days, we closed way above the 200-day moving average. But again, it's like, the pin pricking the balloon, the chicken pecking you to death. The more and more you keep testing this level, the more and more acceptance you see, and the more and more odds are you're going to come below it. So very critical for the bulls to hold it. And we spoke about this briefly maybe last week. I don't know how much weight I put into if the 50 crosses the 200, because just like the 200 being bearish when it crossed over the 50, I went over this. Yeah, the low of that day was 251.05. A couple of days later, we went to 244. Yes, it went down $7, but it spent 3 days below there, and then look what we've done since. The move, by the time this crosses over, the move has happened. By the time this crosses over, the move has happened. So I don't put a lot of weight into those. I know a lot of people look at it, but I don't put a lot of weight into it. Anyway, have a great day trading. Good luck today. Come check us out at camelbacktrading.org, and we'll recap at 4 p.m.